are right now on a panel discussion on blockchain and digital assets, an investor's perspective. Well, crypto assets or crypto has garnered significant attention from the media, financial analysts, governments, regulatory institutions, and investors over the last 2 years. We explore strategies that the most prominent VCs and hedge funds are deploying to generate investment yield with the cryptocurrency ecosystem. Well, we're looking at talking about a VC's view of the space, building scalable blockchain business, why venture capitalists are better big on DeFi, and a look at the current and future trends. Well, we've got with us our panelists. First up, Zachary Cefaratti, the founder and CEO, Dalma Capital. Mr. Cefaratti is the CEO and the principal founder of the Dalma Capital Management Limited. His efforts at Dalma Capital has been dedicated to seeking alpha generating portfolio managers and strategies and providing an accelerator platform on which they can maximize their alpha realization and capture. Well, he's somebody who's also pioneered bridging the gap between traditional financial service practices and crypto economy. Well, we're joined also by Heinrich Zettelmeier, the founder and general partner, Blockchain Valley Ventures. Well, he's the founder and general partner of the Blockchain Valley Ventures, has extensive operational and strategic experience in the growth and turnaround of small and large companies internationally. Well, we also have Andrea joining us, Bonacito, the founding partner and CEO, Eterna Capital. Andrea is the founding partner and CEO of the Eterna Capital, which is an investment fund which is focused on blockchain technology. While Eterna Capital was launched by Andrea and 3x BlackRock employees receiving press coverage from the likes of Forbes, Bloomberg, CoinDesk, Financial News, Investment Week, The National, etc. Eterna Capital has been listed by Forbes as one of the top 3 investment funds operating in the blockchain space, and Andrea has been included in the Forbes 30 under 30 list. Andrea is also an advisor at the Singularity Net, a decentralized marketplace for AI algorithms. We also have joining us is Alex Nascimento, the co-founder of Blockchain, managing director of 7cc Blockchain Investment. While Alex MBA is a faculty founder, a member and co-founder of the LA Blockchain Lab, the UCLA Blockchain Lab, and the Blockchain at UCLA, where he lectures on the blockchain business applications in addition to his role of managing director of 7cc Blockchain Investments, a company which is focused in fostering the blockchain industry. Ladies and gentlemen, we also have with us Syed Harib Maki, the managing director, Alphabet Fund. Syed is currently focused on advising blockchain startups and traditional businesses on utilizing blockchain technology. Well, Syed also manages the crypto blockchain asset portfolios and was previously a specialist at the Abu Dhabi Investment Authority for 9 years. And this entire panel discussion, ladies and gentlemen, is going to be moderated by Cecilia Wong, the founder of Your PR Strategist. Well, Cecilia, beginning her communication career in the fashion and beauty industry, her passion for decentralized technologies led her to founding of the boutique blockchain PR consultancy, Your PR Strategist, a 2020 Technology Innovator Awards winner in the media and PR category. Well, thank you so much to our entire panel for joining us, and over to Cecilia for taking it forward with her incredible panel. Thank you once again. Over to you. If I may request you to kindly unmute yourself, please.
Thank you so much, Bhavana. Thank you for the introductions. I'm going to go straight right in. Okay, as we all know, blockchain technology and also the industry of digital assets has really grown and evolved so much over the last decade. It has the potential to disrupt entire industries and even the global markets moving forward. Right now, we are very honored to have with us some of the top VCs and hedge funds in this ecosystem in our midst. And we would like to see all of this from their perspective as investors. Without further ado, let's start with Heinrich. Would you like to actually give us some background over over what you do, as well as tell us about the sectors and industries that you are currently looking into with your digital asset portfolio?
Cecilia, thanks. Yes, I can do that. We're a venture capital firm born out of Switzerland, the crypto valley, but we do investments on a global basis. Most of our investments are in the fintech space because, I mean, blockchain is one of the biggest innovations in financial industry. So we invest a lot in regtech, so regulatory technology, cybersecurity, crypto infrastructure for banks. So everything that will benefit from cryptos and blockchain or use it as a technology. We also have some portfolio companies in areas like supply chain management, pharma, healthcare, real estate, because these are all sectors that will benefit from that innovation and that technology. We are less a crypto investor, so we don't invest in tokens. This is also because most of our LPs are family offices and Swiss and international ones, and so we go in that a more conservative path. The way we pick company is very peculiar because we do something that we call a total industry research. So together with algorithms and automated approaches, we analyze the whole blockchain industry worldwide to find out how many companies exist. And the number is around 12,000. And this 12,000 blockchain companies worldwide, we then structured by sectors, by applications, by geographies, and filtered that down to the sectors we believe were the most attractive. And then we go there in a deep dive and find the top 3-5 companies. So it's very much a research-driven approach compared to people that use their network and get recommendations. And that's how we pick our investments.
When you say top 5, I mean, what are you looking at actually?
Well, when you look at certain sectors, typically you find around 200 to 300 companies. So there are, like, in that dimension, 300 companies that try to solve supply chain problems through blockchain technologies. And then we obviously look at the size, we look at the industry traction. And as we are now already, let's say, in year 4 of the use of blockchain, you can see companies that have first revenues, that are moving beyond the proof of concepts. They have done pilots, they make their first 1, 2, 3 million revenue. And that is a perfect moment also to invest, because you're investing just a step before the big rollout is coming. And that also gives you still attractive valuations.
So when you say that you don't depend on recommendations, basically, it's only research from your part, and then you reach out to the projects, or do you actually also let them reach out to you?
Well, obviously, many people reach out to us because we especially in Europe and in Switzerland here, stand for being a venture capitalist that invests in blockchain companies. So, of course, there are companies coming to us. But other than that, in fact, we do the outbound reach. We do the analysis, and then we say, these are 5 companies we are really interested in. And then we try to contact them, see where they are, if they look for investments, don't look for investments, and we invest on a global basis. So we just recently made an investment in an Australian company, and look, because there is no one region in blockchain. That's the issue. You cannot say I invest only in Switzerland, because there might be 20 other companies in other regions of the world that are much better in the same topic.
Okay, well, thanks very much, Heinrich. Let's move on to Andrea. Would you also like to tell us about the sectors and industries that your portfolio, the projects that your portfolio belong to, and also give us some insight as to how you pick out these projects and how they're currently doing?
Yeah, definitely. So just a quick intro first. So we, as your colleague mentioned, we are an investment fund that we're based in London, and we invest in blockchain projects, like at the very early stage. So we pretty much operate as a VC. So our sweet spot, let's say, is seed, Series A. In terms of investments we made with the first fund, they were mostly around the protocol and infrastructure layer, because at that point when we launched in 2018, we felt there was the main bottleneck for the technology. So basically, you need to create the infrastructure to ensure that then you could build applications on top of it in a way that was scalable, secure, and decentralized. And we took a few bets there, which are now very successful. So our first fund is going very well. Some of our portfolio companies are the likes of Algorand, Dfinity, that are very high profile and even highly capitalized projects. So they got along like quite well. They didn't suffer during this COVID pandemic too. Now actually we are about to launch a second fund, and there we have identified a few trends that we're focusing on. I think the infrastructure play will still be quite relevant because there's still some work to be done there. But also another interesting trend we're looking at is around adoption and interoperability, because if you have an application built on blockchain X and another built on blockchain Y, you might want these two to communicate with each other. So interoperability is something very important. Then another trend which is very relevant is all around digital ownership and traceability. We are going towards a society where people are taking control of their own data, and they can do whatever they want with that. So we're moving to this world compared to the situation that we are in right now, where you just give your data for free to large corporations and then they do whatever they want with that. And then of course another interesting trend is also marketplaces. So blockchain itself has the ability to remove the middleman from the equation, and we think these will increase, of course, like through time as we develop. And then of course going like into specific cases, of course we monitor very closely the DeFi space, trends like CBDC, and as well stable coins as well is a very interesting trend. And as well, STOs, I think is something that at a certain point will pick up. So it's also something that we're monitoring very closely.
Okay, thank you. And Alex, would you like to also give us some insights into this area?
Sure. So our journey started at UCLA. We have a history of investing in startups at a angel investment Series A, and then when we built the blockchain lab at UCLA, which today is the Blockchain at UCLA club with a little bit over 400 members, 400. We fastly identified that in the United States, given the SEC's regulatory oversight of about 40% of institutional investments on equities and bonds, I agree with Andrea, STOs were the only way to go. So that has been our main focus since 2017. We even wrote a book, which I welcome anyone to check it out on Amazon. It's called The STO Financial Revolution. So that's kind of our core area. We've been doing issuances out of Cayman, out of the US, out of Singapore. And aside from STOs being our main focus, we also work with infrastructure on the mining side of Bitcoin. Obviously, here we're all looking at DeFi right now, but STOs is our main core.
Right. STOs definitely have a lot of potential. It's just, I suppose, because they already come with like a set of, they come with the whole regulatory infrastructure. So this hasn't, I suppose, been an area which has seen as much growth, I would say, because it does come with all that, I would say, baggage, regulatory baggage. I do see STOs as being an area where we will actually see a lot of very good growth over the years, I think, over, yeah, probably it'll take quite a bit of time still. Thank you so much, Alex. Zachary, would you like to give us your input on this point?
Sure, yeah. So Dalma's been interested in working in the crypto and blockchain space since around 2015. We actually worked very closely with Said and the team at Alphabet on our fund platform, having identified them as one of the early movers and having had a phenomenally successful Fund 1 on our platform. But since then, we've tried to focus more on the, or continue to focus more on the institutional market. We have successfully completed several digital security issuances or STOs, including what we understand to have been the first investment bank-led STO last year, when we worked together with our partners at BTG Pactual to tokenize some of their balance sheet. We continue to focus on that market. We worked, we led a deal with a prominent UK real estate developer, and again see that as an interesting market. As you said, you know, it comes with regulatory baggage, if it were, but you know, at the end of the day, that's the securities industry, and we think that for those already dealing in securities, there's a lot more to benefit or a lot more to gain. Regulators do need to kind of catch up, but we're seeing in the pipeline sovereigns or sovereign-related entities starting to utilize blockchain as part of their issuance, settlement, trading infrastructure. Basically bringing their the issuance, the ownership, the custody from what is actually a highly analog era, particularly in debt instruments and bonds, to a much more efficient digital era in the very near future. I think we'll see the first sovereign-related issuances on what will be permissioned chains by the end of this year, or at the latest early next year. So that's certainly an exciting area for us. We are engaging as well with sovereign issuers and large corporates to encourage them the advantages of taking of considering digital securities or blockchain based, even if they are permissioned blockchain based infrastructure. Bringing these guys into permissionless is I think a challenge, but obviously would be our preference. The two deals that we did with that I referred to previously with the UK real estate developer and with BTG Pactual were actually on permissionless chains with our partners at Tezos, which we feel have been phenomenal. We're also actually in the process of a very interesting project that you guys will likely see in the news in the coming days or weeks, to tokenize what we expect will be the most valuable art piece ever sold by an artist, and is setting a record for being the largest as well. Very prominent piece, very key players behind it, and it's actually an enhancement of what people know to be the art tokenization model. So it's something that hasn't been done before. Some very, again, strong partners coming in behind that. So so you'll see something in the headlines in the next in the very near future. This is actually the first time I'm even mentioning or alluding to it publicly. We're also working closely with on the institutional side. We see mining as actually a great way for institutional investors to deploy capital. If we look at, you know, the top miners, they're highly sophisticated, they're highly institutionalized. These are actually, you know, very CapEx oriented businesses. They basically have, and they're actually very simple businesses. One thing that drives me nuts when I talk to institutional investors, they say, oh, well, we don't understand mining. It's the simplest industry. It's the simplest type of commodity mining activity in the world. You have two inputs, electricity and hardware, and then you have a a commodity on the other end that requires zero refining that can be distributed and liquidated immediately. So we think that we're making progress in actually bringing institutional investors who've never invested in crypto, who've never invested in blockchain into this space, and showing them that these are actually just another form of data center. Data centers are the hottest segment of the real estate market and have been the best performing segment of the real estate market in the past 5 years. So that's another key focus for us is helping miners tap into more efficient sources of equity and debt capital in order to remain competitive in what is an increasingly a market that's, I think, more of a kind of winner takes most market for miners. Only those that have access to very, very cheap power and are operating within, I think, in long-term stable regimes and have access to the latest hardware are able to remain competitive. But for those that have that, it's still a money printing machine. So those have been our areas of focus. Again, certainly we keep our eyes on the other segments of the crypto and blockchain market, but these are the ones that excite us.
Right. Thank you very much. What's the name of that art project that you're talking about?
You'll see it very soon.
Oh,
so,
okay. We'll keep our eyes out for that.
Keep your eyes out.
Moving on. I would like to know what has the COVID-19 pandemic perhaps impacted. We'll continue with you, Zachary. Actually, maybe you want to tell us how the pandemic might have impacted your business and also affected the types of projects that you would choose to focus on, or maybe it hasn't.
Yeah, I mean, for mining, it certainly had an impact on the supply chain. We saw a lot of kind of disruption. Now, how much of that was related to infighting in Bitmain, which is an important supplier to the industry, and how much of that was impacted or accelerated by COVID is hard to determine. But I mean, just a case in point, even Apple, yesterday finally made their announcement of their new iPhones. They usually release them in September. It looks like it's going to be over a month of delays for them to be able to deliver on their new 5 nanometer chips. So I think that has been disruptive for miners. It's been quite frustrating, the supply chain disruption that we've seen for hardware. On other parts of the business, I think that one nice thing about crypto is it is borderless. The kind of shutting down of borders and lockdowns and so on and so forth don't really affect the crypto market. Gold, digital gold has certainly been a selling point for Bitcoin in what people expect to potentially be an inflationary environment with governments, particularly the United States, monetizing fiscal deficits in orders of magnitude above what has been previously seen. So I think that there is certainly an increased interest in what may be a more efficient way to invest in a potentially inflation or potentially catastrophe kind of hedge instrument, and I think Bitcoin is believed to play a role there. So I think COVID probably has had more positive impact on crypto and digital assets. I mean, again, look at the FANG stocks. Look at the world being increasingly digital. The fact that we're not doing a physical conference, we're not sitting on a stage right now, but we're doing this over Zoom, is just testimony to the fact that we are moving over
to digital world, in all aspects of our lives. Totally. Thanks so much. Thanks so much, Zachary. Andrea, would you like to give us your take on this?
Yeah, definitely. So from our portfolio standpoint, as I mentioned previously, the companies we have invested in are very well capitalized, very strong investors backing them. So they actually didn't really suffer during the COVID crisis. I think companies that struggled the most are probably companies with more tight situation, they just raised a bit of money and then they had to go out and like do some bridge rounds to actually survive through the COVID. Actually, you know, I would say that the companies in our portfolio, they delivered, you know, quite a lot of very impressive milestones during this period. From a business standpoint, like at Eterna Capital, I think we are adapted, you know, to this change. Of course, it's a completely different world compared to, you know, what was like a couple of years ago. I remember like the first conference I actually joined was actually the World Blockchain Summit 2018 in person, you know, so now it's
right. It was a physical
going
thing.
into virtual, like all this like conference space as well, you know, has moved to virtual, which is of course, you know, interesting because you can still share insights, but you do lose that, you know, networking element that, you know, that needs to be face to face, I think, by some extent. So, you know, there are always, you try to adapt, you of course, at cost of like being accessible to everybody, sometimes you lose some more like human elements. But I think, you know, we, in the end, you know, in the blockchain space also found a nice balance. And from our standpoint, we of course just do a lot more like virtual meetings, and people are more open to that. You know, one issue that we found is that even when you don't have travel restrictions, you don't know, you know, what can happen, you know, in a few days. So it's very uncertain. You know, you don't also want to travel in a country and then, yeah, like just, you know, locked there for like a few weeks or even more. But in general, you know, we also, I would say that we didn't like, it didn't impact ourselves as a business, like from what we wanted to achieve. We just adapted, you know, very quickly. And in general, I feel that we just need to basically live with that for some time and, you know, do our best to adapt.
Right. And moving forward, it's probably going to be some kind of a hybrid type of situation where we have a combination of online, virtual kinds of events and meetings, as well as physical meetings as we move along, I think.
I think also this gave the, you know, the opportunity for people to also see the power. It basically, you know, pushed forward what probably would have happened, you know, in 5-10 years, just, you know, now, you know, very quickly in terms of what you can do with virtual meetings and online meetings. So people, they realize also that many of the meetings they probably had, they could actually be, you know, taken care of like in a virtual fashion.
Yeah, that's
but
true.
then, as you said, you know, it would probably be a mix.
Yeah, some kind of a hybrid. No, I mean, I think that COVID has definitely accelerated like all these changes that we thought would happen like over a span of time, but it's just like done it in months. I mean, it's been pretty crazy in that sense. Heinrich, would you like to tell us how COVID has impacted your business?
Yeah, I mean, first, I mean, it has not changed our view on blockchain and blockchain technology because it's such a fundamental innovation, you know, and COVID has definitely, like Andrea said, gave a push to online, and you said online and digital business models. So overall, in reality, the value of our portfolio has grown, and we have some companies, we have 2 portfolio companies that actually have over proportionally benefited, because one is in the area of what you call hyperlocal delivery. So they help to deliver the last mile from shops to the people in lockdown. And the other one is a company in the area of authentication, so that you allow remote access. Now, what has been very difficult, honestly, for most of our companies, which are mostly B2B business models, is business development. Yeah, because they, you know, normally you travel around, you visit prospective clients, and now you need to switch to online. And as much as it works, it also, for totally new clients, new relationships, it's always slower. It's much slower. So it has slowed down for many of them, the business development. And they had to adapt, for example, the company in the area of authentication, Keyless, they had to do much more regional business development, you know, and put their to grow their business successfully, and then to expand internationally slightly later in a second step. Yeah. So there is a little bit the good and the bad, but overall, I think we are in the right sectors, and it's developing positively forward. And we even have done investments. We've done 2 new investments this year, but we have to say we knew the persons before. We had them met at least once physically, but I think a lot can be done online, also in the VCs.
You just answered my question. Actually, I was going to ask you if you actually did, do any investments during this time, not actually meeting, the person who you were going to sign a contract with, like in person. So you guys actually did invest in like a couple of companies.
Yes, absolutely, we did. We invested, for example, in a company in the UK in the area of blockchain and real estate, and which is a sector that everybody's waiting for, but not yet much was visible. And honestly, for example, I think we never met the guys. We never met the team in the UK. Yeah, but of course we had people that knew them. So you work with also with people that know them, that have met them. So all this becomes more important. That you have a trusted people around you. And but I'm a strong believer you can do a lot in online. But I personally would prefer to travel. I personally would prefer to travel again and meet the people.
Right. I totally get that. Yeah. But I mean, now that we don't have a choice, it's good to know that things are still moving along, and that, you are still able to invest in businesses, that you think are projects and all that you think have potential, and that, all these projects out there, they're not, feeling hopeless, I suppose, because, like you said, business BD in this whole industry, I think, has slowed down quite a bit. So it's good.
And I mean, normally when blockchain is a young industry, so you have a lot of early stage seed investments, and normally, like 80%, only 80, 90, 10 or 20% make it to Series A. Yeah, so this is already tough. I think COVID for many companies in the early and seed stage has brought this moment of truth a little bit earlier that they wanted. Yeah, and that I think is the tough part. And there are probably also some companies that are really good that didn't manage to get enough funding to develop much better. Yeah, because it's clear the funding overall in venture capital in the seed stage has not increased. It rather has gone down. Independent of blockchain.
Right. Alex, would you like to jump in on this? Alex?
Oh, I was muted. Yeah, no, for us, like everybody else, and I agree with Heinrich, I rather travel and meet people in person. I think one of the beauties of the conferences, including WBS in Dubai, was to hang out with my friend Saeed and know about what he's doing in his part of the world. And I think that that's very important if you're looking to do the right investments. And I agree that you do what you have to do, right? So you adapt, and we play as humans, and we adapt, and we utilize Zoom, Google Hangouts. Frankly, like most of my colleagues in the VC space, we've seen a lot of activity during COVID times. I think that not only clients, but as well as investors are all locked at home. So you don't have dinners, you don't have flights, you don't have happy hours, you don't have driving around, you don't. So we're working, I would say, at least 3 or 4 times more with the time of the 24 hours of the day that there are than previously. But I do miss you guys.
Besides Heinrich, I mean, did any one of you actually sign on new projects that you invested in? Any new projects that you actually invested in during this last 6 months?
We did invest in some projects, but they're not yet announced. But yeah.
Okay. Well, so it's good to know, that things are still moving on, and that, at least projects are, like getting funded and all that in the space despite COVID. Okay. Now, this is a topic, I suppose, that a lot of people are very interested in, and that is the DeFi markets right now, which is, I suppose, very hot. Yeah. Guys, I would like you to comment on what's happening in the DeFi space. And then maybe we could also talk about yield farming, which is all the rage now. Let's start with Saeed, because we haven't heard from you at all.
Thank you.
Saeed? Yes.
I was starting to think that you might have forgotten about me.
No, I didn't. I think, yeah, we were like, talking about all the other topics, and you told me that you were interested in talking about DeFi. So, I saved that for you.
For sure. Yeah. No, that's great. It's a very, very interesting topic. The latest buzzword in blockchain and crypto space at the moment. A lot of money has gone into it. A lot of people made a lot of money, and a lot of people lost a lot of money.
A lot, yeah. Both sides, yeah.
But just to see the sheer amount of innovation in that sector has been amazing to see, really. People coming up with like really innovative ideas on how to use, the Ethereum network and other networks that support smart contracts, and yield farming being one of the latest use cases. But I think most people tend to forget that, with the yield farming, people are generating rewards from the tokens of these projects, but because it's more inflationary rather than deflationary. So most of the people that are receiving these rewards are selling them immediately on the market. So the value of the token is going down over time. And if there's no real use case for the token, or no deflationary process in the back end, then ultimately your investment loses value over time, even if you're generating high APY or high yields in the process. So I think.
So you think this is a very purely speculative kind of trading activity? It's just pure speculation?
Yeah, I mean, on the most part, I mean, crypto in general is very speculative. I mean, even Bitcoin is pretty speculative, if you ask me. But with these DeFi projects, it's super speculative, and it's also, you have to be very careful before you go into these different projects, because there's been a lot of cases of what is known as rug pulls, where the actual development team and behind the projects is just waiting for the token price to get to a certain amount at a certain level, and then they're just selling all their tokens, though they're not supposed to be selling them. So a lot of people who have jumped in get burned in the process. But it's kind of like the Wild West at the moment. There's no regulation surrounding this whatsoever. I think it'll be a while yet before the regulators jump onto this. It'll be interesting to see how they respond to decentralized exchanges. Uniswap is now in the top 10 volume-wise for the volume of trades happening. But I think the innovation of decentralized exchanges has been really good for the market, because now if you're a startup crypto project, you don't need to pay a lot of money to get listed on an exchange which has good trading volume. You just start the pair of your token against Ethereum, for example, and you're good to go, and you can have millions of dollars traded on your token within a few clicks. So that's what's been fascinating about it. But I think in terms of hedge funds and VCs, I think it's still pretty high risk, and you definitely wouldn't invest in one of these DeFi projects which has an anonymous team behind it. You definitely want to know who the people are behind it before you put some serious money into it. So,
yeah, there have been some very like you said, anonymous teams. No one knows who they are, and they just put on their tokens, and then they, like, within days, even, the value just goes up and all that. So I'm actually wondering, what about teams and projects that have proven themselves in some capacity, as having a use case, or they have a working product? I mean, what happens when they get onto this DeFi scene? Like, how do they, I mean, why don't you tell me what you think will happen for projects like that? Would that be dangerous for their tokens, actually, for them to even list on, in such an environment?
So I'll give you the best example that I can think of at the moment. There is a blockchain project. It's called Tomo Chain, which actually has a working product as its own blockchain. And they have recently issued a DeFi token, which is in the name of Lua Swap. And that token has actually done very well compared to a lot of the other DeFi.
Can you repeat that?
Sorry, Tomo Chain.
I don't know if I lost you or you lost me. I'm sorry. Sorry, I didn't get that whole part. Maybe you want to repeat that again?
Sure. Can you hear me now better? Yeah. Maybe it's you.
I can hear you. Yes. Can you hear me?
Yeah, I can hear you. Sorry.
Yeah, I don't know. Maybe it's my connection, because I had some problems actually when I started joining. Yeah. So maybe just repeat what you said earlier about project with case. Yeah.
Sure. So
with a working product. Yeah.
I was talking about an example being Tomo Chain. They recently started a DeFi project, which is called Lua Swap, LUA Swap. And that has been more of a yield farming project. And a lot of people have gone into it and started farming it. But what they did, which was pretty interesting, is that they actually locked up the reward tokens. 75% of it was locked up and spread out over a year. So that way it's not as inflationary as other DeFi projects. Also, the APY returns that are showing at the moment are pretty attractive and in line with a lot of the other DeFi projects, where people are just purely jumping in just in terms of the APY numbers that they're seeing. So I think this is one of a very, very few examples of existing blockchain companies that have thought really hard about the DeFi angle, and they've actually have a good use case for the DeFi token that they've issued, because they're actually working on a decentralized exchange, which is Tomodex, which is in the process of happening, and that's still in development. But it's a good use case, and I think it's one of the good DeFi projects that have come out. I mean, I could be wrong. I mean, tomorrow it could go to zero.
Anything could go to zero in this space.
Laugh at me, but yeah, that's one of the very few examples of these projects. But you have to be super picky and super choosy, because every day there's tens, if not hundreds, of these DeFi projects that are coming out. So you have to do the thorough research as much as you can before jumping in on the bandwagon. But I think it's been good. It's been good and it's been bad. It's been good in terms of people coming up with new ideas, but it's been bad in terms of these teams that are anonymous teams coming up with these projects and ideas. Taking all the money and running, if you like. So
right,
it's an interesting place, and I've been actively involved, and I'm always fascinated by what's happening there.
So it's good to know, though, that like you mentioned, there are ways actually to like maybe lower the risk. Like you say, if we could actually prolong the staking periods and keep, I guess, the value of the tokens somewhat a little more stable.
Yeah.
Would you say that?
There's also like another example that I can think of is a project called Core, CORE. And what we've done is that if you provide liquidity of the Core token against Ethereum, for example, those liquidity pool tokens that you're providing are locked forever. So you can't access those tokens anymore. So the benefit of that is twofold. One is that the liquidity on that token remains in the ecosystem. And secondly, the supply of the token is not out there in the market. It's only the rewards from these liquidity pool tokens that are staked, which come onto the market. So it's been a pretty good success so far, and the development team behind it have come up with a pretty, genuinely genius idea that's not been done before. So this is one of the projects where you look at it and you think, okay, yeah, this is something really good.
Yeah, that's good work.
Projects are actually copying them. So
Mm-hmm.
they say, imitation is the sincerest form of flattery. So if you're being copied, then you're doing something right. So
right. Andrea, would you like to also give us your thoughts on DeFi?
Yeah, definitely. I mean, we think DeFi is something very interesting. Frictionless finance is something that, is very important, will become a reality. Of course, within that, there are things that are sustainable and other things that are not sustainable. I think it makes sense, to basically even, provide your crypto as collateral, so then people, you basically start generating an interest rate on your crypto, that's fine. But situations like, yield farming, where pretty much a token is created out of thin air to reward you to hold another token, I'm not sure how this is sustainable. And, we have seen that pretty much what's happening is that there is a very high churn and people just very quickly move into the one that is providing a better yield, and the previous project collapse. So of course, this is something that I think in every cycle where you have a lot of innovation and people understand that the opportunity is big, everyone tries to, at least some people try to find the cracks in the system and then capitalize on that quickly and then leave. One thing I feel that in this space also is interesting to look at is the role of non-fungible tokens in it.
NFTs.
Non-fungible, yeah. So non-fungible tokens are like tokens with like a unique representation, pretty much. Like, so I think we're going towards a world where kids will not anymore collect their cards like of, I don't know, Pokemon cards, like paper cards, but you will have like digital representations, unique representations. And if you think about it, this could be a better way to also incentivize people from a loyalty standpoint, because what pretty much also sometimes in the DeFi space is done to motivate you to hold a certain position is, with yield, with farming, sorry, they create a new token basically, right? What I'm saying is non-fungible tokens, they're already there, and could be an interesting way also to incentivize retail investors because, they could appreciate in value and they could be used, in this space. And I think, also, in the art space, is basically a very interesting way, to transact value on the blockchain with the elements that are digitally unique.
Right. And art, music, collectibles, all these would be actually used for that.
That's, yeah, very big trend as well. And in general, I feel that, DeFi is the natural, next step of, the blockchain journey, because you start by basically designing, you have assets, like Bitcoin, that is like simple, like value that you can move on the blockchain. And then as you move forward, you start building more like sophisticated financial products on the blockchain, of which, of course, some will be sustainable, other will not be. For us, we look at it with like an opportunity standpoint, and basically looking at going into the basket and seeing what makes sense and what doesn't make sense. But it's something that we're definitely very interested in, monitoring very closely. And even some companies from our first fund are like very relevant for that. For instance, I take the example of Algorand. It's basically a blockchain platform mostly focused on the financial sector. So like for Finance 3.0. So, many applications also on DeFi could leverage that. Like if you see already like USDT, USDC, they moved on that, because I feel one issue also that DeFi space had was the very high Ethereum gas fees. we start having a lot of activity,
Oh, that's
being
right.
very expensive. So of course, I think we need to upgrade that, but you also have alternatives that of course have less, developers and use than Ethereum, but they are there from a technological standpoint.
Thanks so much, Andrea. Okay, let's move on to the next topic, where we're exploring the strategies that VCs and hedge funds deploy to generate investment yields. And I think, Saeed, you indicated that you were interested in talking about this. We're going to come back to you. I think we're a bit short on time, so maybe you want to just give us just summarize all the most important points.
Yeah, sure. I'll just maybe raise one point. For me, I think as a VC, you would generate the highest investment yield in your portfolio companies if you have a good process and a good approach to actually adding the maximum value to your investment by supporting the teams behind the projects that you've invested in, and not just by putting the money in and then just forgetting about it and letting the team do what they need to do to actually achieve their objectives. Rather, you need to follow up with these portfolio companies and ensure that you are giving them as much support as possible and adding as much value to them as possible, even if it's something that you can't support them with in certain areas. And you introduce them to certain people or certain companies that can support them, the right type of partners, etc. So there's a lot of things that you can do behind the scene to ensure that you can give your investment as much possibility to generate the most amount of yield. So I think that's
so things like giving them access to a network, maybe even helping with marketing and things like that to help support the projects in your portfolio. Very good. Anyone want to add anything to what Saeed has just said? Or everyone agrees that this is a good way to go, supporting your projects in your portfolio?
This is Heinrich. I 100% agree with Saeed, because I did a lot of turnarounds before becoming, an active venture capital investor for venture capital firms and people that do spray and pray. I don't know if some know the word, because if you invest without later taking care of the companies, you would need around 500 companies, to statistically balance the risk, and nobody can do that. So in reality, I found it the best strategy, besides picking great companies, is adding operational value to them. That's that handles the risk side of things. The upside, most of the companies know themselves because they are often great entrepreneurs and inventors, but you can help them to reduce the risk of failure. Yeah, and I think that in average then lifts your whole portfolio.
Absolutely. Thank you so much, Heinrich. Okay, now for the last, because we are actually really running out of time, so I would like all of you actually to give me in maybe a couple of sentences what you think the future holds in this space. Let me know, which area you want to talk about. It could be about CBDCs, could be about crypto banks right now. But what do you think? Which area do you think is going to definitely which trends do you think are definitely going to be happening in the future? Let's start with Heinrich.
Okay, then I'm short because I took a lot of time. I have a big wish, but I think it will happen, is digital assets, STOs, so that we can do digital shares, digital art, digital
real estate,
in a larger scale, because that would add another exit liquidity layer and also funding layer to young companies. So I really look forward to that.
Cool. Zachary?
Yeah, I mean, I would just say that's another area where we're focused and are interested. I mean, we've already tokenized bank instruments. We've already tokenized real estate. We're in the process of tokenizing this art piece, which is taking it to a completely different level than you've seen in the past. The partners behind it, the scale, the artist, everything is something that's completely unprecedented. And then sovereign bonds are in our pipeline and on the horizon. This is, an institutionalization of digital assets and implementation of this in both real world and financial instruments that is finally ready for that level of institutional adoption. And again, the pipes have now been constructed that are necessary for that to happen. So that's something that over the next year will reach a level of maturity and quality of issuer that is unprecedented to date.
Mm-hmm. Thank you. No, I mean, seriously, I am looking out for that project, that art project you're talking about. That sounds like it's going to be really huge. Andrea? Andrea? Are you muted?
Sorry, can you hear me now?
Okay, yes.
So I would say in terms of future trends, on top of the ones that you already mentioned, like DeFi, CBDC, like STOs, I think we also see that like more sustainable business models are emerging. So I would say that an interesting strategy is also to look at equity deals of blockchain companies that actually now have learned how to make money, and there are like real use case applications. Then areas also like supply chain, smart contract audits, like gaming and others are subsets that we're looking very closely.
Okay, cool. And over to Alex.
Yeah, well, we've been very bullish on security tokens for our entire journey on the blockchain space. We've worked with some of the very early ones, and we continue to see a lot of institutional adoption. Yesterday, by example, the SEC here, the regulating body in the United States, made settlement of digital assets much easier. So we're seeing players like NASDAQ offering full tokenized solutions of digital assets. And we just think that's where you merge what a lot of our colleagues here in the panels were talking about. Real companies, real teams offering real investments via digital assets.
Cool. And Said.
I think I'll agree with everything that all the other panelists said, but maybe I'll add a different angle, and I'll say that I think what's going to become a new trend, and this is one of the reasons why I've set up a company that's focused on this, is I think that you'll see a lot more governments and central banks starting to use blockchain technology to solve a lot of issues and provide solutions to a lot of problems that they have. So I think GovTech and blockchain-focused products and services that help governments with the day-to-day running and governance of their countries, especially central bank digital currencies, I think that is going to be a very big trend going forward, and I expect to see a lot of activity. There is already activity from governments in terms of blockchain and use cases for it, but I think that will just continue to expand and increase potentially.
Well, thank you so much all for all your very, very valuable insights. I'm going to hand over to Bhavana now because I think we have seriously gone over time. But thank you so much all. You guys have really given the audience a lot of very valuable insights. Thank you.
Thank you. Well, thank you so much to the entire panel.